NIO just released their latest quarterly figures on Friday before the market opens. At the time of making this video, the stock is down over 6%. What went wrong in the quarter and what was mentioned by management during the earnings call? Some future projections there, especially when it comes to the newly launched brands and the profitability profile of the company. So let's discuss all of that in this video. Right now, like I said, stock is down around 6.4%, has a market cap under $10 billion. In the last 3 years, of course, this stock has been quite horrible. It's down 78.2%. Year on year, stock is down now over 12%, and year to date will be down closer to 5%. Now, at the start of this year, I said NIO could be one of those stocks that could double this year, which means we go from 4 to 8 or from 4 point something to $10 or so if XYZ happens. XYZ is, of course, increase in production, delivery, and especially margins, because if you continue to lose that much money, eventually you'll run out of money and you'll have to dilute shareholders time and time again. And that has been my biggest issue with NIO. They're trying to do too much at the same time while burning money left, right, and center. Yes, launching new brands, new models, that's cool. But you know that launching new brands, new models is costly. And if your brand awareness is already not that high, what's the point of spending even more money to launch sub-brands? That's my big issue here. Hopefully in the next couple of quarters, they'll figure it out. So let's discuss everything you need to know in this video. If you enjoy this type of videos, hit all the buttons, like, subscribe, would really appreciate that. We also covered Nike and Micron yesterday, so those videos are already live. You can find it in the top right corner as well. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. All right, so let's talk about the numbers for the quarter. Vehicle sales was up 4.7% quarter over quarter or 13.2% year over year. Vehicle margin did improve year over year by 120 basis points. Overall, total revenue did also increase 15.2%, gross profit increased 80.5%, and gross margin increased 420 basis points year over year or 100 basis points quarter over quarter, so that's fine. But if we look at loss from operations, adjusted loss from operations, that has increased quarter over quarter, it is down 9%, 8.5% year over year. Net loss, though, did increase a lot quarter over quarter and year over year. Adjusted net loss, same story there. Now, they said here, looking ahead to 2025, we will sharpen our focus on enhancing profitability by driving cost reduction through technological advancements, optimizing operational efficiency, and accelerating scalable growth. Of course, we've been hearing about these things for quite a while. At one point, you will have to deliver and stop promising stuff. Now, deliveries for Q4, we already know that number. You just basically take every monthly number that they told us before. You get this one, 72,689, beating the lower end of the expectations. Now, for the whole year, 2024 compared to 2023, vehicle sales up 18.2%, margin for those vehicles up 280 basis points, total revenue also up 18.2%, so that's fine. But here as well, if you look at net loss, that has increased 8.1%, adjusted net loss, non-GAAP increased 11.6%. So the big issue is still that they're losing just too much money. And let's be honest, they're not growing as fast as expected. Now, we already got some updates for year to date and the February number and January as well. So we know January and February quite weak, especially February with the Chinese New Year. So in February, the delivery number came in at 13,192 vehicles. That did increase 62.2% year over year. Now, year to date, that number sits at 27,055. That's also up 48.8% year over year. Now, they said the following. Based on an ongoing concern and liquidity assessment, which considers our business plan including revenue growth, working capital management, and the ability to raise funds from banks under available credit quotas, when needed, we believe that our financial resources, including our available cash, cash equivalents, restricted cash, and short-term investments, cash generated from operating activities, and funds from available credit quotas, will be sufficient to support our continuous operations in the ordinary course of business for the next 12 months. Now, of course, you have to believe this. Now, I know that during the call, they also talked about the fact that they can have access to capital markets, whether it's in China or in the United States in USD. I mean, if you continue this way, you will run out of cash, no matter what. Yes, it's been quite a while since they've talked about, okay, we're going to focus more on margin expansions, profitability. Great. We've seen some progress, but you're still losing too much money. As for the outlook, deliveries of vehicles to be between 41 to 43,000 vehicles. Of course, a drop quarter over quarter, but it's still an increase of 36.4% to an increase of 43.1% year on year. Based on the numbers that we've gotten already, that means another increase of around 15,000 vehicles to meet the midpoint of 42,000 vehicles. As for total revenues, that's expected to be between $1.69 billion and $1.76 billion, representing 24.8 to 29.8% year over year growth. So of course, we know Q1, usually a very weak quarter. It includes Chinese New Year's. It includes them ramping up and launching new products. But actually, they're going to launch new vehicles in April as well and in the upcoming quarters. So a couple of comments here from management during the call. Yes, I know, lots of words here on the screen, but it has to be covered. So talking about NIO specifically, NIO Inc. So NIO is aiming for profitability by the fourth quarter of this year, driven by increased sales, improved gross margins, and cost control. The company plans to launch 9 new models across its 3 brands, so NIO, Onvo, and Firefly this year. Again, great, right? It probably can increase volume, but then again, what's the point, right? Why not focus on 1 or 2, make sure that gets a lot of brand awareness, that grows, and then you start launching other brands. But then again, what we've seen with Chinese firms is that, well, divide and conquer. In their case, it's expand and conquer at all costs. They continue by saying NIO anticipates a 40% year-over-year increase in sales for the first quarter. They're targeting 20% gross margin for the main brand and 15% for Onvo by the fourth quarter of 2025. They still target doubling sales in 2025. They expect to see improvements in gross margin starting in the second quarter of this year. The first quarter is a slow season one, and the main NIO models are clearing inventory for a changeover, so the gross margin of the NIO brand remains under pressure. As for Onvo, they said that Onvo brand awareness is significantly lower than NIO's, approximately 1/3. Comes at no surprise. Onvo sales have been below expectations due to its new brand status. Onvo achieved a positive vehicle margin in the early stage of production. They also outsold NIO branded cars in 12 regions. And here's another issue. Onvo is facing pressure in terms of new orders after fulfilling existing orders. So I guess the hype period is over, and now they'll probably have to, have more marketing campaigns, which will increase their sales and marketing, which is increasing expenses. So there is that. And that's the problem, right? That's the problem when you are still small, a small fish in that big sea, and you are trying to expand more and more because, yes, NIO is a known brand, but not really as known as all the others, right? If it was the case, their deliveries would be 5 times more, maybe 10 times more, right? But it's not. So we'll see how that evolves. The Onvo L90 will be unveiled in April with delivery starting in the third quarter. Onvo will launch its third model in the fourth quarter, and their new models are in the relatively high priced and high profit margin range and will greatly contribute to Onvo's gross profit growth. They also say that model range will be kept to a reasonable size. So yeah, interesting information. Lots of promises, lots of future expectations. Now, again, it's up to them to deliver. If we look at the stock right now, we can see on the weekly, big red candle. Big red candle after a big green candle. It also did not manage to stay above that 200-day moving average, which sits just under $5. Right now, the market is actually open. Stock is down around 6 to 7% or so. So we're also under the 50 and the 20-day moving average, back to prices not seen since, basically last week. So yeah, RSI is also neutral right now. And so with NIO, it's pretty clear you go with NIO because you think there is a lot of upside, right? You want exposure to maybe a Chinese brand if you don't want to go with XPeng or a BYD or even Tesla, because Tesla, believe it or not, is exposed to China. This is one of their most successful markets there. So yeah, you go with NIO probably because you think it can outperform. It can 2x from here because, one, smaller size, market cap under $10 billion, share price looks cheap, right? Only 4 point something dollars looks cheap. Again, just because a stock is at $4 doesn't mean that the stock, the valuation is cheap. The dollar amount, yes, but that's about it. For me, NEO is now, well, I don't own it, but for me, NEO this year, they need to execute. They need to meet their own targets. They cannot have another year where, oh, okay, we did this and that, we launched new models, great, our brand awareness went up a little bit, but we're still losing too much money. It just, at one point, this thing will have to stop. Will it happen this year? Remains to be seen. What do you think? Let me know down in the comment section below. Like, subscribe, do all of that, and I'll see you all in the next one. Bye-bye.